morning, everyone. Looking at the US stock markets, the Dow has again recovered from the 21,750 points. Since then, the Dow continues to edge higher, forming the higher high and also the higher low formation, rising back above all the moving average lines as well. We did see the Dow Jones has formed a short-term breakout pullback just towards the EMA 20, which is around the 25,000 psychological level, and the continuation pattern was established towards the 26,200 points. These 26,200 points also coincides with the previous resistance early on during the early part of the November. So for now, let's monitor for this breakout above the 26,200 points level. Should there be a follow-through by interest beyond that, then we could expect the Dow to hit higher back towards its previous all-time high of around the 27,000 psychological level. In the meantime, the 25,500 points, which is around the EMA 20 level, will serve as the immediate support. The good thing on the Dow Jones right now is that the uptrend interorientation formation has also recently been re-established. The EMA 20 is above 60 and 120 has been in line since the past 2 trading days. Given the long stretch of rally on the Dow from the 25,000 towards the 26,200 points level, any pullback will be a healthy one for investors to digest their recent gains before the next recovery to resume on the Dow Jones index. On the broader market, the S&P 500 has again recovered from the 2350 level. Since then, we did see a similar manner with the Dow being formed as the S&P 500 formed the higher high and also the higher low formation towards the 2313 level. This resistance also coincides with the previous resistance early on during the earlier part of November last year. So for now, let's monitor for this breakout above the 18 or 15 level. Should there be a breakout above that, we could expect further upside for the S&P 500 to head towards the 2860 or even towards the 2900 psychological level. In the meantime, the 2750 will serve as the immediate support level for now. Okay, some updates on the crude prices. The crude prices has again recovered from the recent low, which is around the 42.50 US dollars per barrel mark. Since then, the crude prices has been staging the higher high and also the higher low formation towards the 57.80 level. After hitting the 57.80 level, which is around the EMA 120, we are seeing some pullback pattern on the crude prices towards just the EMA 60 or the EMA 20, which is around the 55. So this could be taken as the potential short-term breakout, pullback, and the continuation pattern for the crude prices. Firstly, to retest the 57 or 58, and should there be a breakout beyond that, then we could expect further upside or further recovery on the crude prices to head towards the 63 US dollars per barrel level. In the meantime, the 50 will serve as the immediate support level for now. Okay, some of this on a local front. The FMKLCI has again been hovering between the 1665 towards the 1700 psychological level over the past 1.5 months trading period. Since then, we are seeing the FBMKLCI has managed to break out above the 1700, and the follow-through by interest was noted beyond that. On the FMKLCI right now, tracking the weakness on the Wall Street overnight and also the bearish engulfing candle being formed on yesterday, we could expect further weakness on the FMKLCI for investors to digest their recent gains. And should the FMKLCI find some support along the 1700 and recover, then this could be taken as the breakout, pullback, and the continuation pattern towards the 1740 level on the FMKLCI. But if the 1700 level fails to hold on this pullback, then we might see further retracement on the key index back towards the 1665 level. Already we are seeing some of the overbought position on the FMKLCI. So during this period of time, we are really expecting that the FMKLCI could be staging is due for a pullback at any moment. On the lower liners wise, we are seeing some of the similar manner. Earlier on, we did see a long stretch of recovery on the FM Soccer Index from the EMA 9 level towards the 13,000 psychological level. We did see just a 1 day follow through by interest beyond the 13,000, but the lack of follow-through by interest has seen the FM's market index reverse its position below the EMA 9 as well below the EMA 120 level. For now, we are expecting the MACD indicator to issue a sell signal in coming days. So for now, we are expecting the further pullback on the low liners back towards the 12,300 points level. Most of the companies will be announcing their corporate results, and most of them has been on the weaker side. So we could expect some of the further pullback on the low liners or the broader market back towards the 12,300 points level in view of the weak corporate earnings during this quarter. Until we can see some support along that, some either like a bullish engulfing candle or bullish harami or a hammer candle, then only we can confirm for the breakout pullback continuation pattern towards the 13,600 points level over the longer term period. On stocks wise, some of the stocks that we can watch out for firstly will be Ugitech. Ugitech has retraced from the recent peak of around the 337 towards the recent low of 235 level. After hitting the 235 level, we are already seeing the Ugitech has been forming the higher high and also the higher low formation as price recently break out above the EMA 120 level. And also recently as well, we are seeing the short-term breakout pullback and a potential continuation pattern given that the Ugitech has already formed the bullish candle accompanied by some of the rising volumes being traded over the past couple of days. On Ugitech right now, let's monitor to see if there's any follow-through by interest beyond the 282 level. Should there be a follow-through by interest beyond that, we could expect price to head towards the 306 towards the 314, stop loss below the 265 on Ugitech. The company has also announced a strong set of corporate earnings growing at the high single digit on the quarterly basis. So for now, we could expect some of the gap up formation, but on intraday basis, we might be seeing some more profit taking activities on this counter. On the MFC, price is still on the pullback phase towards the 64 or 65 cents level. Since then, we are seeing the strong recovery trend on MFC as price managed to break out and also close above the EMA 120 level after price has formed a bullish engulfing candle yesterday. We did see the gap down formation on MMSV towards the intraday low of around the 81.5 cents. Since then, we are seeing the price has recovered all its intraday losses to close near its intraday high, forming a bullish engulfing candle, implying that the buyers are still in control on MMSV yesterday. With the breakout above the 92.5 cents level, we could expect further recovery on MMSV towards the 1 ringgit and 8 cents. That will be the immediate target price for now, followed by the 117 stop loss below the 81.5 cents level on MMSV. For Signature International, price is also still on a downtrend, so any recovery from now will be just taken as a technical rebound play. Price has seen some bullish divergence signal on the price and also the MACD indicator during the period of November towards the December last year. Since then, we are seeing the price has staged a recovery, but the recovery was short-lived towards the 38.5 cents, which is around the EMA 60 level. With the rejection along the EMA 60 level, we did see price has staged the pullback towards the 34.5 cents before forming a bullish candle yesterday as price has closed above the EMA 60 level. The EMA 60 level is a strong resistance as earlier we did see a rejection along the EMA 60 level in the mid of November and again in the mid of January. And recently, on yesterday, we are seeing the price has closed above the EMA 60 level. To confirm for the recovery on our Signature International, we need to monitor for the breakout above the 38.5 cents level. Should price breach above the 38.5 cents level, then we could see further technical rebound towards the 42 cents or even back towards the previous peak of around the 44.5 cents level, stop loss below the 34.5 cents level on Signature. Last two companies for the day, firstly will be DNO. DNO Green Technology has earlier retraced from the recent peak of around the 1 ringgit psychological level towards the 67.5 cents. Since then, price has been hovering on a sideways manner. But recently, we are seeing a price has been forming the flag formation of breakout as price formed the bullish candle yesterday, closing above all its moving average line as well, accompanied by some of the improvement in volumes being traded. On DNO right now, we need to monitor to see if there's any follow-through by interest beyond yesterday's high of 77 cents. Should there be a follow-through by interest beyond that, then we can trade DNO towards the 81 cents. That will be the intraday target towards the 85 cents. Stop loss will be located below the 70 cents level on DNO. Things appears to be slightly positive on DNO right now, as you can see that the MACD indicator has been forming the higher high and also the higher low over the past 1.5 months trading period. Last company for the day will be GDB. GDB has been on a downtrend phase towards the recent low of around the 22 cents level after hitting the recent peak of around the 45 cents. Since then, we did see price has made a technical rebound towards just the EMA 120 level, which is around the 29 cents. After hitting the 29 cents, we are seeing price has staged just a mild pullback. During the pullback phase, we did not see much of the selling pressure. And recently, we are seeing a recovery trend on GDP, accompanied by some of the mild improvement in volumes over the past couple of days as well. On GDP right now, let's monitor for the breakout above the 29 cents. Should price breach above the 29 cents, we could expect for further technical rebound towards the 32.5 or even towards the 37 cents. Stop loss below the 25 cents level on GDP. Should there be a follow-through by interest beyond the 29 cents, we could expect the market indicator to shoot a buy signal. The RSI also could be rising back above the 50 level as well. If you have any questions, you can put in the chat box and I'll reply shortly. Okay. There are some companies. There's some question here. Firstly, on EcoWest. I could not monitor, or I cannot remember all the corporate earnings that were reported on yesterday night. So if the corporate earnings came below the below its previous quarters earnings or below the consensus estimates, then we might be seeing some further sell-off on the counters and vice versa. On EcoWest right now, we are seeing price has recover from the 42 cents level towards the recent peak of around the intraday high of 63 cents. After hitting the 63 cents level, forming the inverted hammer candle, signaling the reversal candle, we did see the reversal pattern confirming on the next day on the 25th of February. For by that, we should be getting out on EcoWest below the 56.5 cents, and if you cannot get out from there, then the final defense will be located below the 53 cents level on EcoWest. We are already seeing the price has already, MACD indicator has already issued a sell signal yesterday, whereas the RSI is likely to hit towards the 50 level as well. On EcoWest right now, let's monitor for the support along the 53 cents. If we can find some of the support along the 53 cents, something like a bullish engulfing candle like here, or like a hammer candle like here, then we could expect further recovery on EcoWest back towards the 63 cents. But if the 53 cents level fails to hold, then we might see further selling pressure on EcoWest right now. But all in all, we are already seeing some of the bearish signal on the MACD indicator. So there's a high chance that EcoWest could be trending lower below the 53 cents level. On FGV, after a very sharp recovery from the 63 cents level as price from the higher high and also the higher low formation being supported above the EMA 9 level, it formed the shooting star candle along the 1 ringgit and 38 cents level. After forming the shooting star candle, which is the reversal candle, we are seeing the FGV has formed the 3 black crows formation, implying that this could be the further selling pressure on a reversal pattern on FGV that we're expecting price to hit towards the 98.5 cents level. Earlier, we did see price continues to be supported along the EMA 9, but on yesterday, we did see the price has gave up below the EMA 9, which is below the 1 ringgit and 20 cents level. If the 1 ringgit and 20 cents level give way, we might see further selling pressure over the next coming days towards next coming weeks towards the 98.5 cents level. Like the earlier on the EcoWest, we could expect the MACD indicator to shoot a sell signal, whereas the RSI could be pulling back below the 50 level as well. Any recovery from now for FGV will be taken into, we have to take the selling into strong strategy, while if gains likely to be capped towards the 120, 130 or even towards the 138. So any recovery from now will be an opportunity for you to sell, or you have to lock in your profit or gains immediately. Just give me a minute for the chart to load. On front can, price has again recovered from the recent low of around the 57 cents level. Since then, price has hit towards the recent peak of around the 99 cents. After hitting the 99 cents recent peak level, forming a double top formation, we are seeing some signs of reversal pattern as well on our front can. On front can right now, it has recently violated the first support, which is at the EMA 9 level, the 94 cents. With the 94 cents level being violated, we could be expecting price to hit towards the 89 cents level, which is the next support. So this will be your final defense on front can right now. If price managed to recover above the 89 cents, then this could be taken as the breakout, pullback, and the continuation pattern for price to trend back towards the 98.5 cents or even towards the 1 ringgit psychological level. But if the 89 cents level fails to give way, then we might see further retracement on our front can. For front indicators wise as well, we are seeing some of the weaker signs as the MACD indicator is looking to issue a sell signal, whereas the RSI has tripped below the overbought and is looking to trend towards the 50 level as well. On Gadang right now, we are seeing Gadang has recovered from the recent low of around the 48 cents level. Since then, price has hit towards the 65.5 cents, forming a climatic volume being traded towards the 65.5 cents. Since then, we are seeing some pullback pattern on our Gadang right now over the past 3 trading days, forming the 3 black crows formation. On our Gadang right now, this could be the healthy pullback on our Gadang, given that the pullback was accompanied by some of the lower volumes being traded compared to the previous part of the rally phase. So for Gadang right now, let's monitor to see if there's any support along the 59 cents. If we can find some like support along the 59 cents and price recovered, then we might see then this could be the breakout pullback and the continuation pattern for Gadang to trend back towards the 65.5 cents or even towards the 68 cents level. While immediate stop loss will be located below the 59 cents level on Gadang. Just give me a minute for the chart to load. Okay, well, on IWCT, similar with Gadang, price has formed the has hit the recent peak of around the 67 cents level with some of the climatic volumes being traded over the past 2 trading days. Since then, we are seeing some of the mild pullback on IWCT as price pullback accompanied by some of the low volumes being traded. So this could be a healthy pullback for now on IWCT. So let's monitor to see how price holds above the EMA 9, which is currently located at the 55 cents. If price managed to find some support along the 55 cents, then we can expect the breakout pullback and the continuation pattern for IWCT to retest back towards the 67 cents level. But if the 55 cents level were to give way, then you have to cut loss or take profit immediately. Your first defense will be located towards the recent low of 58.5 cents. If you still want to take If you still want to hold on to your shares, then your final defense is at the 55 cents level on the IWCT. On Lei Hong, I think the company has announced its weak set of corporate earnings. Its revenue, I think, has managed to hit near the record high on a quarterly basis, but the net profit has came below the expectations, which is below the previous year's corresponding quarters net profit. On Lei Hong right now, technical wise, we could be seeing some of the gap down formation on Lei Hong. Should price violates below the 39.5 cents level today, then you have to get out of Lei Hong immediately. But if price were to gap down maybe like 10 to 15% from yesterday's 10 to 15% from yesterday's low, then you can start to bargain hunt on Lei Hong for an intraday recovery towards the 37.5 cents level. For example, if the Lei Hong were to open at around the 35 cents, then you can start to bargain hunt on Lei Hong towards the 37.5 cents level. But if price were to gap down towards just the it opened at maybe like 40 cents, then you have to cut loss or take profit immediately on Lei Hong right now. Already over the past 2 trading days, we are seeing some of the heavy selling pressure on Lei Hong as price rejected the EMA 120, which is around the 50 cents. So that there could be some of the insiders could be selling off on Lei Hong prior to its quarterly report. If there's no further question, that will end the morning briefing for today. Thank you.